It costs $327,000 less to live in Durham region now than it did 6 months ago, with the average cost of a home in Durham sitting at $901,000. Prices have fallen further in some areas more than others, with Durham region leading the way with a 27% price decline. And over the last 2 years, detached homes have seen a 90% increase, townhomes have seen 86%, condos seen a 67% in terms of pricing gains. And since February, which was at the top of the market, with the Bank of Canada announcing its first interest rate hike increase since the pandemic in March, detached homes fell 30%, townhomes fell 25%, and condos fell about 17%. And so if you're watching this video, you're probably been following along with what's been happening in the real estate news. And if you're new here, that's great. Welcome. And in the comments below, I would love to hear your thoughts and let me know what you think. Are prices going to drop more, or are we going to see a leveling off of sorts and just kind of move along sideways instead of going up and down? Alrighty guys, welcome back to this channel. The last video I posted, I went over some market details in York region and outlined how the market has been performing during these rate hikes, really breaking down each asset class. And today we're going to talk about what's been happening in Durham region. For those that are new here, my name is Alice Prince. I am a broker with Royal Page Signature. I run a team called Prince & Co, and we primarily help clients buy and sell real estate throughout York region, Durham region, and Toronto. So the market has continued to slow down during the summer months, given not only the season itself, but with people being busy focusing on fun stuff rather than real estate, but more so given the surprise of this 100 basis point rate increase, which was the largest since 1998. And so here is a graph that shows you the benchmark prices in Durham region, taking into consideration all housing types, including condos, and how they have reacted during times of uncertainty. So in January 2000, the average price of a home cost just under $181,000. In 2008 is when we experienced a little bit of a recession, and that was due to what was happening with our friends just south of the border in the States. And as you can see, prices dipped, but only slightly about 5.5%. And that downturn was really short-lived. It peaked out in June 2008, and at the bottom of the market was about March 2009. So that was about an 8-month period. From January 2010, the average cost of a home now is $284,000, which is a 58% increase. So in that decade, home prices were appreciating on average 6%, with even that little economic hiccup. And something that I note here often is that over the last 40 years, even with all that has happened in the real estate market and the crash in the 80s, the correction in 2008 and 2017, the GTA market has been appreciating on average roughly at 7%. So in the early 2000s, the market was sort of humming along and in line with the historical trends. What's interesting is to see that from 2010 to 2016, the price inclines in prices, although still pretty stable relative to what was happening last decade over here, is not as flat, and it's quickly going up given its 6-month timeline versus the 10-year comparison. Then we move over 2016, and we saw a boom in the market with an average price of $448,000. In that 12 months, prices increased 24% to $553,000. And things got a little bit spicy in 2017, and that run up from January to April was about 20%, with home prices now being $668,000 at the peak. Demand during this time was running high, and we didn't have enough homes for sale to satisfy everybody that was looking, so prices really took off. Now, what I found interesting is that from 2016, it took about 12 months for prices to see an increase of 24%, but only 4 months from January to April to prices accelerate by 20%. Now, if the government didn't step in and didn't implement the 16 4-point housing plan, we would have been in some pretty deep, for lack of a better word, crap. And so if you Google some headlines from that era, you'd find some pretty stifling news. And I remember people being really upset because a lot of parents were worried about how their kids would afford homes in the future. One after another, the headlines were just so scary and really negative, talking about a crash and really the end of the world as we knew it. So in the spring of 2017, Kathleen Wynne, who was our premier at the time, stepped in and announced a plan that did what it was intended to do and cooled down the market. This is when things like the foreign buyer tax was introduced, along with a plethora of many other things. And it worked, right? Sort of. It cooled down the demand, which demand wasn't really our problem or isn't our problem because the government seems to be able to turn that tap on and off when it wants. Supply of housing is our biggest concern. And so you can see here, the market didn't crash. Did it come back to reality? Yes. But note here, at the end of 2016, the average price of a home was $567,000, and it was when really prices started to take off. But at the bottom of the market after the correction was 2018, with prices still being higher at $580,000. Now, then the market kind of bobbed along and ebbed and flowed with seasonal adjustments, but the line is pretty linear. In 2019, the market started to wake up a little bit, and by the time 2020 rolled around, the market had its groove back and confidence in the market was restored. Then, well, we all know what happened with 2020-22, obviously 2020-22, and all the things that happened with COVID. And something else that's interesting to note is how long the downturns in these markets have lasted. So from January 2000 to July 2008, that's about an 8.5-year trend that the market was going up. From July 2008 to March 2009, the average prices were moving down slowly. So that lasted, let's call it just under a year. From March 2009 to April 2017, we've seen another pricing growth of about 8 years. And from April 2017 to September 17, that when the market implemented the Fair Point housing plan, which included the foreign buyer tax, as I mentioned, the market was down for only about 5 months before leveling off in September of that year to December of 2019. And also remember that in 2018, the stress test was also implemented for all home buyers, not just those that were insured, had insured mortgages, which likely also played into how long that market flatlined. Then from January 2020 to February 2022, the market was on a tear for 2 years before, well, what we're experiencing now with the higher borrowing costs. And the market is down about 27%, as I mentioned, to bring prices down to earth, to be more in line with the mortgage costs. So that graph only shows you as far back as the year 2000. It doesn't really note here the crash that we've seen in the 90s. So I just wanted to share this little chart with you here. And this chart is from the Toronto Real Estate Board, and it's a depiction of the average sale prices that takes into consideration all of the GTA. And as you can see here, the peak of the 80s was really 1989, with the average home price being almost $274,000, and almost 39,000 sales happened that year. Now, in 1990, home prices started to fall, and they didn't start turning the corner till about 1997, which was 7 years later. And it wasn't until 12 years from that peak in 2002 till home prices were at that 1990 level. But look at how many sales happened even in the down market. So just remember, people will always need somewhere to live, and people will make decisions because life happens, whether it means that they rent or they own their home. And even if there's more renters and not enough rental units, then prices will go up and start pushing people back onto the buying side. And if there isn't enough homes for sale, as this has been really the issue here, then prices will continue to go up in the long term. It doesn't mean that the market can never go up and it can never go down, but if you look back at this graph, the downturns in the market have been short-lived compared to the increase, whether gradual or sharp, with the exception of the 90s, which was considered to be the actual crash versus a correction. And the three key differences from the 90s until now is that, number one, builders were allowed to receive financing from their projects before selling a single unit. Now they need to sell at least 75% before lenders will fund the projects. Number two was a stress test. We didn't have the stress test back then. Everyone has to undergo a stress test now to ensure that when rates go up relative to their income, they have a cushion to avoid being underwater. Number three is immigration. Back then, immigration in the 90s wasn't what it was today. And over the next 3 years, Canada is set to welcome about 400,000 new neighbors each year. Now, with all the ebbs and flows in the marketplace, real estate long-term has seen an upward trajectory. Keyword being long-term. So if you're making a real estate decision and have a 5, 10, 15-year outlook, then you're going to be in a position that will still outweigh any downturns in the market. So if you would like to know more about what is happening in your neighborhood or the area that you want to purchase in, use the Calendly link below to book a time that is convenient for you to chat further. My name is Alice Prince. Ciao for now, and we'll catch you on the next one.